Welcome and good morning, everybody. Excuse me. This is the Saturday morning Viper Trading webinar. If you're here to learn about trading futures markets using the Viper tools, you're absolutely in the right place. Today's topic is quickly spot trends and see trade setups. So we got to knock out our standard disclaimer before we can look at trades and charts. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Alrighty then, let's get over to screen one. Alan, I see your comments there. I'm going to have to circle back on that. I have some things I need to cover here this morning, but I'll come back to that, okay? So the first thing we need to do, this is part two of the continuation from the Thursday evening webinar. And what I want to talk about, I've got crude oil up here, is that sometimes it's not always easy to see a trend in real time and to see the trades in real time. And that's really quite the challenge for, I think, most traders is, we can always look back after the fact and say, yeah, that was an uptrend and I should have got long here. That looks like a downtrend and I should have gotten short there. So the question then becomes, how do we know at any given time what kind of trade to take? So just a refresher, I'm going to do a quick refresher because some of you might be new and some of you might be visiting and are not familiar with our system. So literally, I'm just going to take a couple of minutes to do a quick refresh, and then I'm going to get straight away into trade setups. Okay? All right. So in fact, this chart right here, this is crude oil, and if you are new, we are intraday traders of futures markets. And we mainly trade the equities, which is ES, E-mini S&P futures, 1250 a tick. Everything on the equities is in the December contract, which is getting ready to roll in a couple of weeks into March. Gold, which we're going to look at today. We used to trade NASDAQ futures. We don't anymore, but some of our traders do. It used to be in the room. We recently swapped out the Russell for YM. YM is the mini Dow futures, $5 a tick. And then, of course, we trade crude oil too, which we're going to look at right now, $10 per tick of movement. These are the indicators that we provide. Viper indicators are the colored background, green, red, and in sort of an indeterminate color, transitional color, if you will. Bar colors, blue, yellow, and red. We have the alerts. This is if you're trading an uptrend, you turn on the long. Downtrend, you're trading the short side. Predictors are the swings, support and resistance levels in real time. And then, of course, you have the bands. The mid band is a thick line here, and you have 1, 2, 3, 4 bands below it, 1, 2, 3, 4 bands above it, for a total of 8. So let's talk about how we trade. So, and I've said this probably 1,000 times, but it bears worth repeating, that when you are in an uptrend, the uptrend begins with what's called the thrust move. That would be the push in the direction of the trend, in this case up, and we have to patiently wait for retracements. Retracements are pullbacks. So let's look at the opposite of an uptrend. So over here, of course, we have what's called the beginning of a downtrend. So here we have a push in the down direction. And so a retracement would be up, like such. Now, there are 3 types of trades that we mainly teach. There's some other subtle nuances to it, but the 3 main trades are as follows. When you are in an up trade, or up move, so you're looking for long trades, you have what's called a mid-band trade. And so the mid-band trade is the band above the mid-band, the band below the mid-band, and of course sitting directly on the mid-band itself, like such. You have minimum criteria retracements, excuse me, which in the case of a long move come into here. And you have deep retracements, which can go as far as down into here and still be in an uptrend for a long trade. Okay? The converse is true for downtrends. And you can see over here some good examples of it. So, excuse me, the band above the midband and below the midband, and directly on the midband itself, in the case of the downtrend, for kiss and roll short on a retracement. Minimum criteria trade on a downtrend would be located in here, just above line 2. And the deep retracement would be up into here. I'm going to take a quick sip of tea. Stand by. There we go. Okay, sorry about that. Now, I think the challenge from what I've seen is knowing where to get in these trades. I mean, you can say to yourself, look, intuitively, I understand what a minimum criteria. I understand deep retracement, and I understand midbands. That's clear to me. I understand that. Here on the short side, I get it. Okay, anything around the midband, excuse me, is a midband trade. Minimum, I see. Above band, I know. I get it. Deep retracement, etc. But the thing is, the challenge is that the markets almost never go exactly to the same spots all the time. If they did, let's face it, everybody in the world would trade and make $1 gazillion every morning, and we all be fat and happy and living in Jamaica. But it doesn't work that way. Markets are complicated. Sometimes they have nice setups. Sometimes the setups aren't so clean. In the beginning of learning how to trade, I would strongly urge you to do a couple of things. The first one is, and I'm just saying as you learn, as you get more experience and get better at trading, you can add to your trading repertoire. In the beginning, I would probably hold off on learning the deep retracement trade. Just hold off on that, okay? And I wouldn't really dabble too much in the minimum criteria. So for the purpose of this webinar, I'm going to take those right off the table. I'm not saying that they're not good trades. I'm not saying it's not valid trade setups. They're excellent trade setups. But in the beginning, as you learn, what I find when I talk to a lot of traders, I talk to a lot of traders all the time, is that what you how would you say? You're taking on a little bit too much. Okay? It's better to start y kahula a una, simpler y better. The simpler you can make it, the quicker you're going to pick it up. So let's look at a couple of setups real quick here, okay? I'm just going to take these right off the table, and we're going to focus solely on midband trade setups, and we're going to do a couple of these together, okay? I'm going to start with the short side and look at the anatomy of a short trade. And I'm going to do it like this. When you see a market thrust down, as you see right here, there is a natural tendency to want to jump into the market because as it's dropping, and let's reconstruct this drop. We're looking at crude oil. This is the January contract. Let's suppose that you didn't get a break here. You didn't put a box. You just, for whatever reason, you just did not get that. And so it's dropping, and you want to get in. And it's dropping like such. Now, what happens is that there's what's called FOMO, the fear of missing out, and so you have a natural tendency to want to hit the sell button down here. This is true in the morning too, say on the equities. You wake up, you fire up your charts, you're all ready, you get your coffee going, everything's all set, market's getting ready to open, you're all jacked up, ready to do it. And next thing you know, you see the market's tanking like a dog, and you're not in it. Right? But what you have to do, you really, really have to do this. Look, I've been trading 25 years. I fight it every morning, so I know what it's like. You want to pull the trigger. You want to get short. but you just can't. You have to wait patiently for a retracement. And that's a skill that you have to learn, and you will be rewarded for it. Now, at what point does this market start retracing? Where? Where is it? What starts to happen? How do you know it's retracing? Where? Where is it starting to do that? Can you see it as I move it back and forth? So let's talk about the anatomy of the retracement itself. So when you look at these bars here, as the market descends, what is the primary close direction of the bars? Up or down? They're not all doing it, but the predominant direction of the closing of the bars is what? Up or down in this area right here? Down. There's a couple that close up, but not the predominant direction is closing down. Now, let's do something different. Let's look over here for a second. When you look at the primary closing direction of bars in this area right here, what direction is it? Is it up or down? Up. These bars are closing up, yes? Right? And these bars are mainly closing down. All right? So there's several clues that are helping you right off the bat to see what the market is doing, yes? First of all, the background has turned red here, right? We have a red stealth line, the sneaky snake red line, helping you to visualize it. The bars are predominantly red and closing down, right? And what else is happening? Well, let's take a look. The mid band and all the bands around it are stair-stepping down, right? So it's pretty clear to us that we're in a downtrend and we are looking for shorts on a retracement. And the retracement starts to begin with the closing of these bars up right here. This is the apex of the drop. And then we begin to ascend. Okay? Now, as we ascend, and before we start to ascend, as the market is sitting down here at 5606, 5610, 5614, where is the midband? So the market, just to be clear on how we're looking at this, the actual market itself, the crude, is sitting right here, right? But where is the midband? The midband is here. So when we start to think about market entries, in this case, we're looking for a kiss and roll short off of resistance to sell the market. Should our eyes be focused down here and worrying about the fact that we're missing the drop? Or would it be better for our eyes to be focused up here, thinking about if the market came to here that we might want to sell it? Do you see the difference in your focus of your attention? The focus of the attention, in all due respect, should not really be here, because at some point it's going to hit a support level. And, you could put a line on your chart, from a prior support level. I don't know, maybe somewhere in here like that. So you're anticipating a bounce. But the trade opportunity, as I'm trying to show you, the trade opportunity is not here. The trade opportunity is up here. So we need to be thinking of that. So for instance, when you're in the live trading room and a market like crude is sitting down here at this 5606, and we're saying, and we're not short, and you hear a comment like this: I'm anticipating a bounce down there, and if it got anywhere up around the midband, say around 30-ish, and kissed and rolled, I would look to short that. So just to be clear to everybody, there's no, I want to sort of clear up any sort of mystery around that. This isn't some kind of magic or voodoo, and we're not randomly making numbers up. We're kind of debunking the whole thing for you And I'm telling you, this is where I'm focused, right here, right there. I'm worrying about this area right here. I'm not thinking too much about this other than the fact that I'm going to start looking for when it bounces. So tell me when it starts to bounce. Right there, right? See the bars closing up. We talked about that. Now, what do we do when the market starts to enter our opportunity zone? And let me be clear where the opportunity zone is. We said just a few minutes ago that it is the band above the midband and directly below the midband and on the midband itself. So if we say that we're not going to be too concerned about minimum criteria or deep retracement criteria entries, then our eyes are all focused right here. Now, when bars start to enter this band of opportunity, what do we do? What do you do? Well, let me help you out. There's a bar starting to encroach into the sweet spot of the opportunity for shorting zone. Here is another one. Right here. Now, some of you might get all nervous and panicky and say, what am I going to do? Even though you've been patiently sitting there waiting for it to happen, and now it's happening, and you might be saying, what the heck am I going to do now? Let's do a couple more bars together. Ready? Here we go. Okay, there's another one. What is the location of this bar right here? Where is that bar sitting? Right on the midband, right? It's right on the midband. These bars that I am showing you here cannot get any more implicit in the shorting opportunity that you could find if you went to Wikipedia and looked it up. This is what you wait for. And so you have to know what to do. What are you going to do? Here, I'll give you a couple more bars. Here we go. Okay, there's another one. How many bars are in your opportunity zone now? 1, 2, 3, 4. Here, you want another one? I'll give you another bar. There's 2 more. Okay, many of you are saying, I'm going to start to get ready to draw a region box around it using the Object Trader tool and enabling the short only button, right? Okay, here, how about a couple more? There you go. 1, 2, 3, 4, 5, 6, 7, 8 bars. 8 bars now are sitting in the sweet spot of your opportunity zone. Now, here is the important question. How do you know when the selling, in this case, we're getting short, so we want selling to resume? How do you know? What will happen to these bars when the selling resumes? And I'll help you out. Will they continue to close up like this? Or will they start closing in a different direction? What do you think? Will they continue to close up like these bars right here? Up, 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 up. When the selling resumes, will they continue to do that? Or will they start to exhibit different behavior that might be more something like this? Right. They'll start closing down. Right. Sebastian, Sandra, Louie, Byron, Mike, everybody in here this morning. Welcome if you came in late. Don't worry, this is recorded and we're going to send it out. Everybody's going to get a copy of it, so don't worry. A lot of late birds coming in, no problem. Don't sweat it out. Now, when the selling resumes and you start to see bars close down, you type in the letter D for down. Ready? Here we go. I'm going to start showing the bars. Bar by bar. Let's do that again. You type in a D when you start to see bars closing down. The letter D. Good. Now, before this bar forms, right here, what should we have done? There's two things that you can do to get short before the close of that bar right there. There's two things you could have done to get short here. Well, technically three. Technically, there are three things you could do to get short before the oval circle bar closing down below the midband right there. Draw a box around these candles, yes. And it would look something like this. That would be an Object Trader region box enabled for short only. Close outside the box would be filled short on the close of this bar right here. Yes. Let me make sure I'm in sim. Yes. Okay, good. All right. Could you have put a limit sell order here? Like that? Yes. Right? Maybe you didn't have time to get the box in there. Maybe for whatever reason. But could you have put a limit order there? Of course you could. Could you have hit a market sell order while the market was inside of this box? Here. Could you hit a sell market order? Market sell. Yes. Could you use a retracement line that it closes below? Of course. So there's 3 or 4 ways to get short. Now, the advantage of using the Object Trader tool, whether it's a box or a line, is the fact that the automated tool then puts in all your targets and your stops, and it's all automated from there. Your hands you're done. It takes over. But you can manually move things around, obviously. But you're in. When you put limit orders in, whether you put 1 or 2 or 3 or however many, how many contracts you take, now you personally have to put your targets in and your stops and move things around and all that sort of stuff. I see some questions coming in. Let me see here. Let me answer them very quickly. If you have questions, please type them in now. Put the volume back on in a second, Giuseppe. Just give me a minute. So there is a question about where you put the bottom of the box. Now, I want to get very clear about this, because this is a big question, and it is critical to trade entry. I'm going to blow this way up huge big. Here's what I look for. You could use an ATM. Yes, Daniel. Yeah, that's another way. You set up a little ATM with your targets and your stops, and then put your limit order has sell right here, and then it would take over. Right, that's another way to do it. And it's perfectly acceptable. The difference between a limit and a region box is that the limit is actually filled here, whereas a close outside of a region box is filled on the close of the bar. So it will be slightly by a few ticks different. Yes. Yeah, all I did was right-click on the chart, Louis, to set. I'm right-clicking on the chart, and you put a sell stop where you want to get in on a limit order. I look for the wicks and tops and bottoms of candles to get in. So let me show you what I'm talking about to form the top and the bottom of the box. Can you see the bottom of this wick right here and the top of this wick right here? As those bars are forming just above the midband in our opportunity zone, the first thing I look for is that wick and that wick. And I get ready to form the box. The other thing that confirms it is the wick of this candle right here. Confirms the bottom of that right there. See it? Franz says, have you ever done a test before exclusively mid-man, ignore all the others, but for increasing contracts, 5 contracts, ATM strategy, 3 cross line 6, precondition? Franz, we haven't really done an explicit study of the mid-band trade. I can tell you, having traded it for years, coming up on 10 years now, it has a very high likelihood in a trend of being profitable. And the reason for that is that, and some of you might be wondering this, the distance between here, which is the point at which the selling is resuming at the mid-band here. And before I do this pop quiz, I'm going to show something, but I want to ask you a question first. If you're going to get a scalp off and you're going to take this trade, where do you want it to go? What would be a scalp target and or the first target, and where do you want the market to go from this short? So that's a question before I resumed this discussion of where the market's going. Where are you going to start to get out? Where are you going to scale out? What might be some good scalpy targets? Assuming you even get one, or even assuming if you get a runner. There's a lot of assumptions there, I guess. Look at the chart. Think about it for a second. If you were taking this short, where might you want to put your targets? Okay, good. Good. Okay, let me say what everybody's kind of typing in here. I see a lot of 10 ticks. I see some 12 ticks. I see some 8 ticks. That's good. How about, would this area be good? What about maybe putting a target down here around line 2? Let's see, you're going to be filled short at hopefully 28, right? Filled at 28. How about 18? 18 would be a 10 tick target. Might that be good? Like right in here? What do you think? Yeah, absolutely. Get your scalpy off. Might it get to here? I don't know. We're going to find out. Might it get, here's the swing was 06. Might it get to here? Yeah, that'd be great. That'd be 22 ticks. $220 on a one lot, right? All right, good, good. So you're thinking ahead. So part of the success in trading, as most of you know, of course, is that you have to anticipate to participate. You have to be always a little bit forward thinking. What's the market going to do next? And how am I going to react to it? As opposed to more reactionary, oh, the market's going to come get me. You don't want to live in fear. You want to be prepared and proactively deal with what the market's doing. Yes? All right, well, let's advance the chart and see what happens. All right, there we go. Those of you who had a 10-tick scalpy target got filled somewhere right in here. Good for you. Good call. That's how you do it. When somebody says, hey, take some scalpy coin in the live trading room, this is what we're talking about. Take your scalp coin, meaning that it's moved at least 8 or 10 ticks in your favor, and you've taken contract number 1 off, or number 2 or 3, or however many you have open. Louis, I'll circle back. I'll allot time for a bunch of questions, and then we'll take care of it. We're trying to stick with the theme of what we're doing here. Now, watch this. What starts to happen here? It's bouncing off of line 2. Uh-oh. Wick the midband again. Now it rolls over and starts to tank back down to the bottom. So how do we handle this? Here it came back, right back into where we got in, slightly above it. What do we do? How do you handle a situation like that? Think about it for a second. I'll give you some options in just a second. But how might we deal with that? We got our scalp off. We're pretty happy with it. Maybe you have a 1 lot left here. You could add another. Yes. Could you sell more here? That's correct. Yes. You could add another one here. You could add 2 more there as it started to close down. Could you have had a tight stop on it, maybe here, and been stopped out and look for re-entry and rebox it? Yes. Could you have had the stop on your second lot sitting right here, say 2 or 3 ticks above your entry, and it takes you out on one of these bars right here, you get stopped out. If that happened, because remember we said if you start with a 2 lot and your initial stop's 12.10 or 12 ticks, so your initial stop's up here on the 2 lot, yes? You got your scalp off here, right? And then you take the second stop, the initial stop, and you drag it down to 2 or 3 ticks below your entry, and then one of these bars would have stopped you out here, right? Now, if you got stopped out, could you get back in? Yes. Yeah. Could you rebox it? Of course. Might look something, I don't know what the heck that keeps doing that for. Might it look something like that? Yes. Could you put another buy or a sell limit order in here? Yes. So all the entry techniques that we used over here are valid again if you stopped out. If you had a looser stop, if your stop was looser, like up into here maybe, then you never got stopped out. MZ, I don't put too much weight on that. So MZ's question is, in the first retracement, the bars turned yellow. In the second retracement, they stayed red. Does that mean that there's a higher likelihood of a successful short trade? That could be. That's just the algorithm coloring the bars. I look at it more from a high-level point of view. I don't look at it from a certainty of trade success point of view. I mean, visually, when the market is selling off, it's helpful to see that there's red bars. I guess that's another way to put it. So when it was selling off here and breaking down, the red bars visually just confirm, with the red background and the stair stepping and all the things that we do to confirm that we're in a downtrend is all very helpful. Yes. So there were a number of ways to handle the retracement again. So this was kind of a double entry short condition. We had the short entry here. You got the scalp off. Maybe you stopped out. Maybe you didn't. If you didn't, of course, then your trade, then you just resume the trail and you trail it on down and off you go with your runner. If you did get stopped out, in this case right here, then you simply rebox or put another sell entry order right there and you get right back in and you start the process all over again. Get your stop off down here, your scalp target, you re-enter with 2, and then you got your runner. Let's see where it went. Yeah, so you had a nice drop. Now, a word to trail stops. Yeah, the high point of the swings. So can you see? And I'm gonna try to help you as much as I can in drawing the boxes because that's a critical part, or the placement of the limit orders. Can you see the wick of this candle, and can you see the wick of this candle right here? So in my view, so let me show you why I put that limit sell order in there and why the bottom of the box would be sitting right here. Is because the wicks of those two candles. See them? Now I put the top of the box here, which was the top of this candle right here. But in the case of the short, the top of the box placement does not really matter. It's not critical because you're not getting long, right? Let me pause. Do we have any other questions before we go on? We're going to look at some long trades now. Any other questions? This is your chance to go ahead and bip in some questions on how we executed this short trade. Trafum, do you wait for 2 bottom wicks to form? You might miss it. Not necessarily. In my view, on each one of these little boxed areas, what the wick of the first candle has, in my mind, already set the placement. And if you get another one, you're lucky. And it confirms it. In this case right here and here. In this case right here and here. Yeah, so you don't have to wait for 2 to start drawing the box or placing your limit orders. Let me see here. Another question from Claude. Let's see if I can read that real quick here. Look at the webinar on Thursday. I had a question with Chart Trader. Not possible to put orders to sell limit or buy orders at the same time. Yes, you can. Yeah. Let's say hypothetically here, let's do a hypothetical here. Let's say that this is the open of the market and you think that the market might go either way. Yeah, absolutely. Let's say on this box right here, let's say hypothetically it's like 6 o'clock on crude and it's whipping all over the place and you want to be able to get long or short. Can you put a buy limit order above the box? Yeah, sure. Can you put a sell order right here? Yes. So you effectively boxed it in with a buy sell, which you could do with your region box anyway. I don't use the Touch Plus feature on OT, Giuseppe. You can. It's built in there. I don't personally use it that much. I'm a close outside the box person myself, but there's other ways to do it. Yes. So yes, you can put a buy or a sell simultaneously on the chart. Okay, any other questions on the short trades? How we handled that? The entry, the reasoning behind where and why we got in, the various methods of entry, short, in the case of this downtrending situation, how you could have handled the double box condition, either stopping out and re-entering or having looser stops. Okay, you got it, Claude? Gerard says, in the case where it pushes through the midline, I would assume you expect to retrace and touch the midline before continuing up for a deep retracement. Well, in this condition, Gerard, we did not get that. It simply remained in this band above the mid band, and we went ahead and got the short on the close of this bar, or a limit order fill. Well, a limit order, in the example here, the reason I would prefer a box or a limit order is that if you did hit a market sell as it was in here and it never broke, let's say hypothetically it didn't do that, which it did, it broke, we know it went hit the target. But if for some reason, some funky thing comes out of OPEC and oil goes crazy and just starts to spaz up here, if you're going to take the market sell here inside the box, you better very quickly get a stop on it and keep it tight, like right here. So it's all about risk return, right? So you might say, well, Charles, if you get inside the box, you get a much better fill than a limit and a close of the box, and I would agree. Yeah, your fill is much better up in here, no question about it. But the risk is higher that the resumption of selling does not resume. So you have to put a tight stop right away on it, right here. See that? So your risk is much less. I personally like to see evidence that the market is resuming the trend direction. In this case, that's down. Well, if you're taking a market order, you wouldn't, if you're doing a market sell here, in my view, which I almost pretty much never do, but if you did, don't go ahead and stick your stop way up here, 12 ticks. No, you wouldn't do that. No, of course not. You keep it nice and tight in the event that you get something like that. Yeah, don't give them 12 ticks. Okay? All right, good. I'm new on trial here. I get confused when you're referring to the bands. I see 3, green, yellow. Well, the bands, Daniel, are well, I'm not talking about the when we refer to bands. Here, let me just. You might have come in late a little bit, and that's okay. So let me just explain it this way. The band is, this would be a band. This is called band number 1. This would be band number 2. This red line right here is called line 2 because it's above band number 2. This would be band number 3. This would be band number 4. Now, when we say the mid band, we're referring to the thick line right here in the middle of the 8 bands. So it's above band 4, and it's below band 5. That's band 5, obviously, right? Band 6 would be here. Line 6 would be the thin green line above band 6, so line 6. So that's the difference between a line and a band. And of course, this would be band number 7 right here. And then the outermost upper band is called band number 8. So, when you first look at it, I know it might be a little confusing, but just overall, it's 8 bands 4 below, 4 above the midband, which is the thick line here, and this is called the midband. And this gives the form and structure for most of our trades are taken in this area right here for the reasons we mentioned earlier. Because if you're heading up in the case of a retracement to get a long trade, you have approximately 24 ticks between here, the apex, and the midband. That's 24 ticks. So we feel that this is sufficient enough retracement for a long and a short to take a trade. Okay? All right, let's go on to some long trade setups. I don't want to spend the whole morning on the short setups, but is that clear? I went into excruciating detail here about how and where and why to manage to take and manage the short. So hopefully that helped everybody see how to do that. Any other questions on the shorts? Okay. All right, good. Okay, let's look for some long trade setups and discuss the long trade entry. Let's see if I can find a juicy one for you. Stand by. Looking for a good. You want a nice clean one or you want a messy one? What do you think? What do you say, you team? You want a nice softball? Lob it right up to you? Or you want one that's a little more messy? Not so clean. Oh, everybody wants a messy one. Whatever you have. All right, let's do it this way. I'm going to go ahead and I'm going to reconstruct this particular long trade in real time by advancing the bars on the chart. And when you think you see a long, so I'll help you out. It will be a long and it will be an uptrend. Byron says, bring on the heat. We need to learn. Okay, cool. All right. This one is not going to be so clean. But when you think you see a long trade setup, and I'll help you out, it's going to be a long. In fact, I'm going to clean the chart up. Stand by. Here we go. Let me get all this old stuff off of here so it doesn't confuse anybody. All right, chart's clean. There we go. Here we go. This would have been, I think, 2 days ago. It might have been Thursday. This is the Asian trading session. So the U.S. market has closed on crude, and now we're in the Asian session. You can see here to the left, slightly here to the left, that we are sideways to up, that the market has thrust up like such, turning the background green. We had a pullback here, and now we have pushed higher. So before we even start, does anybody want to take a long trade up here? Would this be a good spot to pull the trigger? What do you think? Any takers long right there? 56.55 market order. Let's get in. Come on, let's ride it up. What do you think? Looking good. Look, this bar's pulling back to 52. I say market order right there. No? No takers? All right. Okay, fine. Well, then we'll wait. Let's wait together. So when we're ready to take the long, we're going to go ahead and type in the letter L. Here we go. 1919. So this would be, would that be 7:19 in the evening here in Pacific Time, California. All right, here we go. Now we're at 1933, 7:33. Looking for long trades. Okay, now we're at 22, so now we're at 10:22 in the evening, my time. Now we're at 10:40, so you'd be the late birds, late bird Asian market traders, looking for longs on crude. Okay, now we're at 11:30, 11:29. Looking for longs. We type in an L when we think we see a long trade entry on crude. Okay, now we're at 11. Okay, there's midnight. Now we're going into the European session. Okay, there's midnight. Now we're into the European trading session. Okay. Okay, now we're 11 minutes into the European session. Big banks in London and Europe are trading the markets, the futures markets now. Okay, there's 37 minutes in to the midnight hour. All right, I'm going to stop right there. Now, thank you for your participation. All of you that typed in L's at various times, let me recap what I saw coming in. Nobody wanted to take the trade up here, so that was good. Obviously, you are at the apex of the thrust in the uptrend moving market, and you absolutely, we teach and train and do not take the thrust part of a move ever, ever, ever. That's a cardinal rule of trading. Under no circumstances will you take the thrust. So nobody wanted that. Good. Now, there was a couple 3, 4 L's that trickled in right here when these bars formed right here. Now, we know that that is a minimum criteria trade because we closed below stealth and we closed below line 6 in the uptrend. So technically speaking, you were correct. That's a minimum criteria trade. However, is that what we were looking for here? No. We were looking for mid-band trades. So, which bar was the first to enter the mid-band opportunity zone? This one, A, or this one, B? What was the first bar to enter our opportunity zone to get long? A or B? Candle A. Good. Because we close into the band above the mid-band right here. Good. Now, when these bars formed right here, could you have drawn a box or put a limit order above right here? Yes. So many of you, as these bars formed, the yellow bars right here, typed in the letter L. Good. That is correct. However, was this box, or if you had a sell order sitting right here, ever filled? No. That never filled. It went deeper. In fact, the bars turned red and went to the bottom of the sweet spot of the band directly below the mid-band, here. Now, let me ask you a question. When these bars formed right here, could you have drawn another box and or put another sell limit order in? Or, I'm sorry, buy, we're getting long. Yeah, buy. Yeah, buy. Could you have gotten rid of this box in this order, canceled that, put another box here with a buy here? Yes, absolutely. That's what you should have done because the first entry never filled. So a good way to think of this is that as we looked at different opportunities, sometimes the bars will pause as they enter our opportunity zone. Sometimes they will sit somewhere in here and stop and pause and form a little sideways box and give you an opportunity to box it or put limit or however you want to get in. Okay. Sometimes as you can see in other situations, sometimes they'll sit directly on the mid-band and pause like that. We saw that in our last short trade, right? Sometimes they might go a little bit deeper, like this. So when you conceptually think about long or short trade entries, in our minds, we have to be prepared for all three conditions because as the bars enter the zone, we don't know at any given point what we're going to get. Does that make sense? And that's hard because you know, if you're in, you know, like me, I'm a rigid person. I want things to be well defined and structured. I don't want it all loosey-loosey. I don't want it to have to think about 2 or 3 different things. I just want it to come and all set up perfect for me. But is that the way the real world works? No. No, it doesn't. Many times it's messy. Okay, you're going to get lots of bars kind of jockling around in here. okay? And what I'm impressing upon you is you have to be flexible. We have structure in the way that we're entering the trade with either box or limits or market or however you're getting in. That's a given. We know we're going to do that. However, the position of the bars is never really fixed because they can go wherever they're going to go, right? Confused. Is it a B stop order, not a limit? Well, if you, let's say hypothetically, here, let's do this. So now if you use the box, and I'm going to simulate getting filled long by leaving a 2-lot sitting right here. So let's say on the close of one of these bars here, depending on where you put your order, you're filled long right here. Now the difference I think I mentioned is this. If you put a limit sell order on where I have it positioned right here, when this bar starts to form and it crosses this line, you will be filled long here at 34. If you put a region box in, as I have drawn right here around these red bars, then you would not be filled until the close of this bar right here. So in this case, you're talking about a difference of, let me see how many ticks that is. So the limit order is filled at 34, and the closed bar is not filled till 38, so 4 ticks different. Now, in the case of the region box using the Object Trader tool, if you had a 2-lot filled here, it will, and you said I want a 12-tick initial stop, it will go 12 ticks below 38 and automatically put in a 2-lot stop. 2-lot stop at 26. Yeah, so that would be right here. OT will do that for you. Now, if you were filled at 34 and you wanted a 2-lot on a limit order, you would have to physically go in, and 12 ticks below there would be 22, which would be all the way down. Oops, no, it would be lower than that. Now, let me ask you a question for those of you who put the limit order in, and you wanted a 12-tick stop below 34, which would be all the way down there. Would you leave it there? Would you actually put it there? Or would you put it somewhere else? You could drag the box down and reactivate it. Yes, Giuseppe. Or you could deactivate the first box and just draw another one. Yes. So my question for you limit order traders. You're filled long here at 34, and you have to put your initial stop in yourself because OT was not engaged and it did not do it for you. Would you go down 12 ticks below your entry and put your stop way down here? Yes or no? That's just the question. Yes or no? Would you put your stop down there? What do you think? That's 12 ticks. Looks pretty good to me. Nice and loose. Give Crudy some good old wiggle room. What do you think? No. Why wouldn't you just put it right here? A tick under that swing. Yeah, of course. So you're looking at a 6-tick stop, not a 12-tick stop. Likewise, if you were filled on the close of that bar here and the 12-tick stop was all the way down here somewhere, would you just leave it there? No. You drag it right up here nice and tight. Because if for some reason this market flips out and crude decides to tank and just rips it, you're not going to give a full stop out all the way down here. That makes no sense at all. If the swing's going to hold, that swing's got to hold right there. So you put it nice and tight. Yeah, a tick or two below that swing, right, Gerard? Yeah. Yeah, so that did not happen. Okay, last question. When you get long from wherever you're filled, 34 or 38, what is your first target? Where do you want to get contract number 1 off of the table? You can either say it is cast your vote in ticks or a physical location or number on the chart. You're filled long at 34 or 38 on either a region box or a limit order. Where would target number 1 be located? Take a look at the chart. Target number 1. You got a 2 lot. Got a 2 lot on from right here. You know, either here or here, wherever you got in. By hook or by crook, you're long. Where is the first target? Time's almost up. We're going to take the first coiny on contract number 1. Okay, good. A lot of you are saying 10 ticks. A lot of you are saying the number 48, which just happens to be the location of line number 6 right here. Good. Which, if this would be 14 ticks from here, and it would be 10 ticks from here. Yes, so that is correct. Either 10 ticks, 12 ticks, 8 ticks, or line 6. And did you get it? Let's see. Well, we dink around the entry for a little while, dinking around, and then we pop it right there like that. Yes, target acquired. First target right here, like that. Good. Now, does everybody know how to engage the trail stops and where they're located as the market ascends in the case of the long in your favor? Does anybody not know how to anybody need any guidance on how to do the trails? Yes? Show a little bit here? Okay. All right. Okay, so let's do it like this. All right, so your initial stop was here. And then you get your scalp target off. So contract number 1 is taken off somewhere up in here, right? Okay, we see that, we know that. Now we have to trail the stops on contract number 2. Now I want to show you this, and this is going to be helpful for you. Can you see how now we are starting to get the green stealth line right here? Can you see it beginning to form? All right, well, let's continue up a little further. Now, you can see here that with these bars right here that we have taken out the swing right here located at 60. Now, as this actually occurs, can you see now that line 6 and the stealth line, in fact, let me blow this up a little bit bigger so you can see it real good. There, that's better. Now, can you see how stealth and line 6 are beginning to ascend with the market as it moves? So what you're going to do is you're going to take that stop. If you have to do it manually, if you're using Object Trader, it will do it for you. You're going to come up and you're going to start to follow stealth and line 6 like such. See it right here as it goes up? Can you see how it continues to ascend in your favor? That line 6 and stealth are following it up. And so that's how you would do your trail. Your trail goes just like that, just like that. Okay, it's coming up, moving in our favor, moving in our favor. Now, what is going on right here? Now, let me just ask you this way. What is the predominant direction of the close of all these bars here, from here all the way up to here? What direction are the bars closing? All these bars here. Not every single one of them, but I said the predominant closing direction from all the way down here. All the way up. Up. How about this bar right here? What's going on with that dude? Down. All right, let's look at another one. Okay. How about those 3? Would you not agree that these are the first collection of bars that have not continued to close up at a higher level than all these bars all the way from down here? What is this starting to tell you? What's your spidey sense telling you when you start to see something like that? What is that going to potentially mean for your trade? And where would your trail stop be located? Right there. See it? That's profit taking. That's right. All the market participants who are long from lower levels, way over here, over here, here with you, wherever you got in, and they're trailing, everybody's in profit taking right up in here. And so, in all likelihood, right in here is where your trail stop got taken out, right in here, like that. Now, that's a pretty good trade. We said 34 was the fill, and it got all the way to, well, let's say you stopped out at, I don't know, 77. So that's 34, 43 ticks. 43 ticks on the runner and 10 ticks on the scalp. So 53 ticks. A little over 5 bones less commission per contract. That could be your one and done. How many would be one and done right there with that one? 5 bones. $530 less commission. One trade, done. Scalpy and a 43 tick runner. Yeah, that's all you need. You don't need to take 15 trades a morning to make money. How many trades does it take to make money in a given trading session? How many trades do you need to make a profit? One. That's right. One. You only need one. All this stuff where the market's jiggling around and going up and sideways and all manner of all over the place, you can ignore all that. So obviously the key, there's several keys to it. One of the main ones is proper instrument selection. We've talked about that before. You've got to find an instrument that you're comfortable with. I'd say start with something nice and easy like ES or gold or crude. I would avoid the Russell, NASDAQ, and even possibly YM as you learn. YM's okay, but it can be a little whippy sometimes. Whatever instrument, I would not start to learn on more than one or two. Excuse me. Sorry about that. Got another tickle here. I'm going to stop the recorder.